Welcome to Wealth Nest, your home for smart trading and financial growth. Dive in, level up your strategies, and let's build your wealth one trade at a time. Most traders jump from one holy grail system to another like kids in a candy shop. They try indicators, algorithms, magic trend leans, only to end up frustrated, broke, and blaming the market. But here's the brutal truth. The problem isn't the market. The problem isn't the broker. The problem isn't even your capital. The problem is inconsistency and lack of a structured edge. The EURUSD Sniper Strategy solves both. We're not here to throw random trades at the wall and hope for green pips. We're here to wait, stalk, and execute with military precision. If you're reading this, I'm going to assume one thing. You want to trade EURUSD like a professional, not like a gambler. Capital preservation. First, growth second. Your motto is simple. Preserve capital first, grow it second. Risk is capped at 30 pips max. Structure is king. We don't guess direction. We read the market structure on the 4H time frame. The 4H chart is the general's map. We use a top-down approach, starting wide 4H, narrowing 15M, and striking 3M. Each time frame has one job. On the 4H, we identify market structure and locate points of interest, specifically fair value gaps left behind after impulsive moves. A fair value gap is a three-candle pattern where the middle candle's body and wick create an imbalance between buyers and sellers. Price tends to revisit these imbalances before continuing in the original direction. That FVG becomes our POI, our hunting ground. The entire execution process is built upon a foundation of patience and precision, starting with the higher time frames. Before we even consider an entry, we are watching the 4-hour chart intently. Our primary rule, the one that precedes all others, is that price must decisively tap into our predefined 4-hour point of interest. This isn't just a guideline, it's a rigid law. This POI represents a significant level where institutional orders are likely sitting, making it a high probability reversal zone. If price reverses before reaching our level or flies straight through it without any reaction, the potential trade is immediately invalidated. We don't chase the market, we wait for the market to come to our chosen battleground. Once that critical tap occurs, our focus immediately shifts down to the 15-minute time frame. This is where we look for our first piece of confirmation, a change of character, or chach. What are we looking for exactly? In a bearish scenario, after tapping a supply zone, we need to see the price break below the most recent significant swing low. This action tells a story. It signals that the buyers who were recently pushing the price up have failed, and sellers are now stepping in with enough force to break the established market structure. This isn't just a random wiggle, it's the first tangible evidence that the institutional interest at the 4H POI is beginning to influence price, shifting the momentum in our favor. Without this 15-minute chach, we assume the original trend is still intact and we stay out. With our higher time frame bias confirmed, we now zoom in for the kill. This is where the sniper pulls the trigger, and it happens on the 3-minute chart. We are leveraging the fractal nature of the market, knowing that the same patterns repeat on smaller scales. After the 15-minute choch, price will typically create an imbalance or a fair value gap. We wait for price to pull back into this 15-minute FVG. As it does, we are watching the 3-minute chart for a repeat performance, a micro change of character. Once that tiny structure breaks, confirming the immediate order flow, we wait for one final piece, a new, tiny 3-minute FVG to form. This is our signal. We place our entry right at this 3-minute FVG, allowing for an incredibly precise entry with a minimal stop loss. This multi-layered confirmation process is how we achieve such a high strike rate. Your target win rate with this strategy should be between 65 and 75%. This level of consistency isn't born from luck, it's forged through unwavering discipline. You must follow these rules religiously, treating them as the absolute law of your trading plan. Let's be crystal clear, if there is no tap of the 4-hour POI, there is no trade. If there is no 15-minute change of character, there is no trade. If the 3-minute entry doesn't present itself perfectly, you guessed it, there is no trade. You are a professional, a specialist, not a gambler hoping for a lucky break. By adhering to this strict filtering process, you systematically eliminate low-probability setups and focus only on the A-plus opportunities the market gives you. Finally, we must talk about the most critical rule of all, risk management. Your maximum risk on any single trade is 30 pips, period. There are no exceptions to this rule. Even if a setup looks like the most perfect guaranteed winner you have ever seen, if the logical stop placement requires more than 30 pips, the trade is invalid. You must walk away. This rule is not arbitrary, it's intrinsically linked to the strategy's design. The entire purpose of our multi-time frame confirmation is to pinpoint entries so precise that they require a wide stop. A setup needing more risk is a red flag, signaling that our entry isn't refined enough. This rule is your ultimate defense, protecting your capital from emotional decisions and ensuring your long-term survival and profitability in this game. Alright, let's dive into a detailed step-by-step trade walkthrough using our FVG strategy. We'll start with a hypothetical setup on the EURUSD pair. The first and most crucial step is always top-down analysis, beginning with a higher time frame like the 4-hour chart. Here we can clearly see the market is in a strong bullish trend, consistently printing higher highs and higher lows. This tells us the overall order flow is to the upside. Following a recent powerful rally, the market left behind a clear inefficiency, a 4-hour bullish fair value gap, right around the 1.0850 level. This gap represents a pocket of liquidity where aggressive buying occurred, and it acts as a powerful magnet for price. Our core thesis is that price will eventually pull back to rebalance this inefficiency before continuing its upward trajectory. Now we drop down to a medium time frame, the 15-minute chart, to watch how price reacts as it approaches our 4-hour point of interest. We aren't just blindly entering at 1.0850, we need confirmation. As price enters the FVG, we see a sharp rejection, leaving a long wick below the candle body. This is our first clue that buyers are stepping in. The key confirmation comes next. We get a change of character, or chach. This occurs when price impulsively breaks above the most recent lower high of the pullback structure. This signals a shift in momentum from the short-term downtrend to a new uptrend. Following this break, a new smaller 15-minute bullish FVG forms between 1.0855 and 1.0860. This is a critical piece of the puzzle. It's the market showing us its hand, creating a fresh zone of inefficiency in our intended direction. With our higher timeframe thesis and medium timeframe confirmation in place, we can now drill down to a low timeframe like the 3-minute chart for a precision entry. This is where we refine our risk. Inside the 15-minute FVG, we wait for a fractal pattern to play out, another smaller, micro change of character. This confirms that buying pressure is building at a granular level. Immediately after, an even smaller 3-minute FVG forms at 1.0857. This becomes our pinpoint entry zone. We don't chase the price, we patiently wait for it to retest this level. As it does, we get our final confirmation and entry trigger, a powerful, bullish engulfing candle. This candle completely swallows the previous one, signaling an aggressive takeover by buyers. This is our signal to execute the trade. Now let's define our trade parameters, which is just as important as the entry itself. Our entry is at 1.0857, the level of the 3-minute FVG triggered by the engulfing candle. Our stop loss is placed logically at 1.0850, just below the low of the wick that swept the 4-hour FVG. If price breaks this level, our entire trade idea is invalidated, so we're happy to take the small loss. This gives us a tiny risk of only 7 pips. Our target is the prominent 4-hour high at 1.0950. In a bullish market, previous highs are natural targets for liquidity. This gives us a potential reward of 93 pips. By combining multi-time frame analysis with a precision entry, we've engineered a trade with an incredible risk-to-reward ratio of 1:13. This is the power of this methodology. To succeed where most traders fail, you must adopt the mindset of a sniper in war. This isn't just a metaphor, it's a mandate for survival. First, a sniper can wait for days for one perfect moment. As a trader, you wait for the market to come to your predefined levels. You don't chase price or force trades out of boredom. You wait because impatience is the fastest way to bleed your account. Second, a sniper knows the exact ballistics of their round. Your trading must be just as clinical. Your entry, stop loss, and take profit are hard-coded rules, not suggestions. You execute your plan mechanically. Finally, the battlefield is chaos. News, social media, your own fear and greed, it's all noise designed to make you act impulsively. A sniper tunes it out. You must trust your analysis. Your chart and your system are your reality. Everything else is a distraction. This mindset is forged through a non-negotiable daily routine. It begins in your reconnaissance phase. On the 4-hour chart, you map the battlefield. Identify major swing highs and lows to understand the dominant trend. This is your structural bias. Then, you identify your points of interest, or POIs, the refined supply and demand zones where big money will likely act. You mark these zones with precision. This is where you will lay your ambush. Then comes the phase, the wait. You do nothing but observe. Price may take hours to reach your POI. This is where most traders fail. They get antsy and jump in. You will not. You will wait for the target to enter your kill zone. When price finally taps your 4-hour POI, the phase begins. You don't enter blindly. You drop to a lower time frame like the 3-minute chart for confirmation. You're looking for a clear micro-level break of structure that signals the higher time frame level is holding. This is your final confirmation, the green light to pull the trigger. This multi-time frame approach is your greatest defense against false signals. Mastering this requires an unwavering 90-day commitment. Trade this system exactly as it is written. Why 90 days? It's the time needed to overwrite years of bad habits, revenge trading, FOMO entries, undisciplined exits. It's long enough to experience various market conditions and prove the system's robustness. During this period there are 0 deviations. Perform the full 4-hour analysis every single day. Resist adding another indicator or opinion. The system is complete. Adding more creates confusion. And most importantly, a loss is a business expense. Analyze it and move on. A win is a successful execution. Analyze it and move on. By adhering to this rigid framework, discipline becomes automatic, patience becomes second nature, and profitability becomes the natural byproduct of your professional process. For many who have struggled, blown accounts, and felt lost system hopping, this is your last best hope. This is the line between being a predator and being prey. It's the difference between with surgical precision and your capital, becoming liquidity for professionals. You must trade like your financial future depends on it, because it does. Every setup you analyze, every rule you follow, every ounce of patience you exercise is a direct investment in the future you want to build. This isn't a hobby, this is a profession. Treat it with the seriousness it deserves. Thanks for watching Wealth Nest, your home for mastering the art of trading with precision and discipline. If you found value today, don't forget to hit that subscribe button, give us a thumbs up, and turn on the notifications bell so you never miss a new strategy. Share this video with someone who's ready to level up their trading game, and join the Wealth Nest community for more exclusive tips and support. Your journey to financial mastery starts right here. See you in the next one.